What's ahead for the trading week in Asia? Let's find out with Wayne Arnold, Breakingviews strategist. Wayne, China, big on the calendar next week. We've got the full PMI number. What are you expecting there?
I think the official number is going to come in predictably bright, a little bit, positive, showing there's a recovery in the Chinese economy. I think the HSBC number this week was more accurate. It shows that China's still contracting.
So a decent recovery, though, almost a recovery.
I think that's like saying telling a man who's flying off a building that he's falling a little less quickly. It's been falling for 9 months. The Chinese economy is clearly in a contractionary mode. That means the economy is slowing. Not going into recession, but definitely growth is slowing. You see that in casino numbers this week from Sands and in consumer numbers in China.
Also, the Guangdong figure
and
on
in Guangdong
exporters.
Yeah, sure. That's mostly Europe as a factor there. But yeah, domestic demand is definitely slowing, and it's a challenge for China.
Let's bring in some of the other regional economies. We've got Korea and Taiwan also putting out PMI numbers.
Yeah, same thing there. I mean, Korea and Taiwan, big exporters to China. As demand in China slows down, they're starting to slow. In June, their PMI numbers went negative for the first time in a long time. That's what we're going to see, I think, again. They're going to continue to slow, and that's putting pressure on policymakers there to cut rates to try to get growth back up.
Right now, the other economy the IMF's just cut was India in terms of GDP forecasts. We've got a rate decision next week. Inflation looking a little soft ahead of that, but are we going to see a cut?
Well, see, the bank there is in a tricky spot because they're trying to sort of put a lid on inflation, which is being pushed up by food prices on the back of that late monsoon. But really what's happening is the economy, because investment's slowing down really quick. So they need to cut rates, but they're trying to resist. And what everyone in the market wants to see is them to cut.
Right. I mean, our poll puts it at Q4. Is that too late?
I think that they're facing a stagflationary risk. I think they need to do something pretty quickly and let inflation sort itself out when the weather improves.
Right. Okay. Well, the weather in Japan looking a little less gloomy than the rest of Asia.
Yeah.
We've got some big equity figures coming out next week.
Yeah.
Toyota, Honda.
Well, these are, not only are they the world's largest car maker, some of the biggest companies in Asia, Toyota particularly is like number 2. I think their numbers are going to look pretty good because they're coming in comparison to last year when we had the tsunami effect. They're going to complain a lot about the dollar-yen rate, but actually it's right where it was, so that isn't that big of a factor for them.
Hitachi's the other one reporting next week.
Yeah, Hitachi's huge. People forget about Hitachi. It's a diversified conglomerate, makes a lot of industrial goods, and that most of it goes to feed Asia as it develops and grows, and that's going to slow down. So they're not going to do as well as the car makers, which are actually benefiting from that slow, sluggish recovery in the U.S. People are buying cars again.
They're not buying photocopiers.
No, they're not buying photocopiers. They're not buying turbines.
All right. We'll have to leave it right there.
Okay.